Hey guys, so in this video I'm going to be going over 20 great dividend stocks for 2018. Buying dividend stocks is great because they pay you every quarter, or in some cases even every month, just to own the stock, and you can reinvest these dividends and buy more shares if you don't need the money right away. Most of the stocks that I own are dividend stocks, and so I wanted to put together a list of 20 great dividend stocks for 2018. If you're new to my channel, I make videos on the stock market and investing, so if you're interested in that, consider subscribing, and let's get right into the video. To make it on this list, the stocks had to fit a few criteria. They needed to have raised their dividend every year for the last 30 years, they needed to be yielding over 2%, and they needed to have a market cap of over $10 billion. This made sure that they were committed to raising their dividend, they still had a relatively strong yield, and they were relatively large companies, which generally makes them a bit safer. When making this list, I just focused on the dividend and didn't look at the valuation as much as I would have if I was going to be putting these stocks in a stocks I'm buying in a certain month video. So I would recommend just keeping an eye on these companies, and if you need a dividend stock, then it would be worth looking through them, but I don't necessarily love the valuation of every single company on the list right now. So the first great dividend stock for 2018 is AT&T. The symbol for them is T. They're a $230 billion telecommunications and media company. They have raised their dividend every single year for 34 years, and they are currently yielding about 5.4%. Now, the one thing with such a high yield is that they have not been raising their dividend at as high of a rate as some of the other companies on this list, but they have raised their dividend at around 2% every year for the last 4 years. And like I said, that's a small increase, and those will add up, but it is not as much as some of the other companies because AT&T has such a high yield right now at 5.4%. So the second dividend stock for 2018 is Walgreens Boots Alliance. The symbol for them is WBA. And they are a $76 billion company that is the largest drugstore chain in the United States. They have raised their dividend every single year for 42 years, and they are currently yielding 2.1%. Over the last 4 years, they have raised their dividend every single year by between 4 and 7%, so they are committed to raising their dividend at a pretty strong rate. And since they have raised their dividend every single year for 42 consecutive years, it is clear that they are committed to raising their dividend every single year. The third stock on my list is Walmart. The symbol for them is WMT. They are a $315 billion retail store company, and they're working on their online segment so they can better compete with Amazon. They have raised their dividend every single year for 44 years, and they are currently yielding around 2%. Over the last 4 years, they've raised their dividend by around 2% per year, so the raises aren't super high, but at least they have been raising their dividend. I think that Walmart is pretty safe. I know that they're competing with Amazon right now, which can be hard, but I think Walmart has a very good retail store footprint, as well as they're working well to move on to online, and so they will be able to compete with Amazon, and their dividend should be pretty safe. The fourth stock that I have on my list is Rowe Price. The symbol for them is TROW. They're a $28 billion asset management company that has raised their dividend every single year for 31 years. Right now they are yielding 2%, and in 2015 and 2016, they raised their dividend by between 15% and 20% each year. However, in 2017 and 2018, they've only raised their dividend by about 5% each year. So they're raising it at a bit slower rate than they did in 2015 and 2016. However, 5% is still a very nice raise. The one concern that I have for them is that they have a lot of actively managed portfolios that they run, and with the increase in passive management and a lot of people shifting over to ETFs, that could make it hard for Rowe Price to grow in the future, but I think that they will probably be fine and they will continue to pay out their strong dividend. The fifth company that I have on my list is 3M. The symbol for them is MMM. They're a $150 billion industrial conglomerate company that has raised its dividend every single year for 59 years. They're currently yielding around 2%, and the last 2 years they have increased their dividend by about 10% each year. This is a great dividend increase that will really add up over time, and since they're yielding only 2% right now, they definitely do have room to raise it a lot more in the future. The sixth stock on my list is Aflac. They're a $35 billion insurance company that has raised their dividend every single year for 35 years. They are currently yielding around 2.05%, and they've raised their dividend by around 5% each of the last 4 years. The next company is Realty Income, which has a symbol of O. They are a real estate investment trust, and they're the only REIT on my list. And they're a $15.5 billion triple net lease REIT. They've raised their dividend every single quarter for the last 81 quarters. They tend to do quarterly dividend raises, and they pay out their dividend every single month. Right now they're yielding around 4.85%, and they tend to increase their dividend by about 4% to 5% every year. Next I have Cincinnati Financial. The symbol for them is CINF. They're a $12.5 billion insurance company that has raised their dividend every single year for the last 56 years. They're currently yielding 2.6%, and they tend to increase their dividend by about 4% to 5% every year. Next on my list is Clorox, which is an $18.5 billion company that makes consumer household products like bleach. This makes them pretty safe from recessions because they're in the consumer staples segment of the market. They've raised their dividend every single year for the last 40 years, and they're currently yielding 2.34%. They tend to increase their dividend by around 4% to 5% every year. Next on my list is Coke, which is a $200 billion beverage company that I'm pretty sure every single person has heard of. They've raised their dividend every single year for 55 years, and they're currently yielding 3.1%. They also have tended to increase their dividend by 6 to 8% per year for the last 4 years. This is strong dividend growth, and with a 3.1% yield, they are looking pretty attractive. Consolidated Edison is the next company on my list. The stock symbol for them is ED. They're a $25 billion utility company that has raised their dividend every single year for the last 43 years. They're currently yielding 3.6%, which is a pretty strong yield. And in 2015 to 2017, they increased their dividend by around 3%, but they've increased it by 7% in 2018. Hopefully this means that they're going to continue raising their dividend in this range of around 7% for the future years, because that will help grow their dividend even more. Moving on to Emerson Electric, which has a symbol of EMR. They're a $47 billion company that makes industrial products. They've raised their dividend every single year for the last 60 years. They're currently yielding 2.65%, and they've raised their dividend by just under 2% for the last 3 years. This isn't great increases over the last 3 years, but they are yielding 2.65%, which is pretty attractive. And since they've raised their dividend every single year for the last 60 years, it's pretty clear that they're committed to increasing their dividend every single year. At number 13 on my list, I have ExxonMobil. The symbol for them is XOM. They're a $373 billion integrated oil company that has raised its dividend every single year for 35 years. The fact that they've been able to raise their dividend every single year for 35 years is very impressive, because they are in the oil segment, which is very reliant on the price of oil for the profitability of the companies, but this shows that they are stable and have a long-term focus, and that they've been able to deliver strong shareholder returns over this amount of time. Then another good thing about ExxonMobil is that they don't have as much debt as a lot of the other oil majors, and they have a big downstream and refining segment, and so they can make money even if oil prices are low and their upstream segment isn't making as much. That is one of the benefits of being an integrated oil company. They're currently yielding 3.5%, and for the last 2 years, they've raised their dividend by around 3% each year. The next company on my list is Genuine Parts Company. The symbol is GPC. They're a $15.3 billion company that makes automotive and industrial replacement parts. They have raised their dividend every single year for 61 years, which is very, very impressive, and they're currently yielding about 2.6%. From 2015 to 2017, they raised their dividend by about 7% per year, and they raised it by 3% in 2018. Next on my list is Johnson & Johnson, which is a $390 billion company that operates in multiple segments of the healthcare industry. They have raised their dividend every single year for 55 years, and they're currently yielding 2.3%. They also tend to raise their dividend by about 6% every year, so that's a very strong rate of increase in their dividend. Next is Kimberly Clark, which is a $41.5 billion consumer staples company that makes things like Kleenex and Huggies diapers. This is good because consumer staples companies tend to be safer from recession, because people still need Kleenexes in a recession, which means that they will likely be stable long term. This is one of the reasons why they've been able to raise their dividend every single year for 45 years. They're currently yielding about 3.3%, and they tend to raise their dividend by about 5% per year. Next on my list is Pepsi. The symbol is PEP. They're a $173 billion company that makes beverages and owns a few snack food companies. They've raised their dividend every single year for the past 45 years, and they are currently yielding 2.65%. They raised their dividend by about 7% every year for the last 3 years, which is a pretty impressive dividend growth rate. Coming in at number 18 on my list is Procter & Gamble. They're a $227 billion company that makes consumer products like Tide Pods and Gillette razors. This is another consumer staples company, which is nice because they tend to be more stable, which allows them to raise their dividend consistently, and you don't need to worry as much during a recession because people still need to shave during a recession. They've raised their dividend every single year for the last 61 years, and they're currently yielding 3.1%. On average, they've raised their dividend by about 4% per year over the last 4 years. Number 19 is Sysco. The symbol for them is SYY. They're a $33 billion food service and restaurant supply company. They've raised their dividend every single year for the last 47 years, and they are currently yielding about 2.3%. They've averaged around a 7% growth rate in their dividend over the last 4 years. Finally, coming in at number 20 is Target. The symbol for them is TGT. They're a $42.5 billion retail store company. They've raised their dividend every single year for the last 46 years, and they're currently yielding about 3.2%. Over the last 3 years, they've raised their dividend by about 5 to 8% per year. My one concern with Target is that retail is really shifting, and competing with Amazon and Walmart could be difficult with them. So while they have had a very strong history of raising their dividend in the past, it will be important to pay attention to them to make sure that they don't start to struggle due to the shifting retail environment. So these were 20 dividend stocks that I think are great for 2018. Unlike in my stocks to buy each month videos that I do, I haven't done a deep dive into the valuation of these companies. I've just mostly looked at their dividend and the fact that they have been raising their dividend quite a bit and how much they've been raising it by. So this doesn't necessarily mean it's a good opportunity to buy them. However, they are all stocks that are worth watching. And if you're looking for some dividend stocks to buy, it would be worth taking a look at any of the names on this list. So thank you for watching. If you enjoyed this video, please leave a like down below and consider subscribing.